But lots going on in the real estate space as well. What's the outlook when it comes to the housing demand? Are there new project launches when it comes to DLF? We've got Ashok Tyagi, the managing director, right here with us to answer that and lots more. Mr. Tyagi, welcome to ET Now. Thanks so much for joining in. Let's begin by just talking about the residential market and the Delhi NCR region in particular. Gurugram has been performing quite well. Give us a sense as to what the outlook is in terms of demand on ground.
Okay, so good morning. So clearly, it's now been a consistent story for more than eight quarters plus that the demand is very buoyant. In fact, it's growing stronger, I'd say, by the quarter. We had that successful launch in March of last year, and we have a launch pipeline lined up for most of it for the second half of this year, though a couple of smaller launches are happening now also. And I think we are, frankly, the entire market is looking pretty strong right now. And it's really, it's across segments from the super luxury, premium, If at all there's been some slowdown, possibly it's been on the lower end of the market because of the increased EMI rates, etc. But really, most of the premium and premium plus categories where we typically operate in are actually very strong.
Mr. Tyagi, good morning. When we spoke to you last time, DLF management was celebrating. They were almost doing Bhangra on ET now because of that big launch where one shot you were able to raise about $1 billion plus kind of in booking. So which is the next big one which will entice you to do Bhangra?
So, we are in the north, so Bhangra is in our veins. So,
Okay.
Anyway, but on a more serious thing, the fact is that I think in the second half of this year, we have two major launches lined up in Gurugram, and possibly one more launch lined up in the Chandigarh Tri-City. We have one tower of our Central Delhi project also lined up for the final launch. So I think we clearly have these 3 or 4 launches. We also hopefully before at least the end of, if not Q4, latest by Q1 next year, we should have our phase 1 launch in Mumbai. And we will possibly have launches in both Goa and Chennai in the next 9 months period.
Why has demand been so strong? And I'm saying purely out of curiosity, because it's not that anything dramatic has changed in the last 1.5 years. We had a COVID sugar rush that forced everyone to buy more residential, work at home, low interest rates. Those factors were at play. But post that, inflation has been high. Real estate prices have been high, but demand is still robust. What is the macro which is driving this robustness?
So honestly, Nikunj, I'm not an economist really, but the fact is that you are correct that the demand has been strong. It's braved the interest rate cycle. Hopefully, now that we are at possibly the fag end of the interest rate hike cycle, things are looking even more sort of, stable going forward. But the fact is that, in fact, originally the demand kickback happened from like the lower and the budget end of the market. Then it sort of spread upwards, either the luxury and the super luxury. And I think at least there is possibly, despite the inflation, I think there is clearly a greater sense of optimism, at least in the upper middle classes and the classes beyond them, for sure, which I think is one of the big reasons driving this entire housing boom. The second thing, of course, also, which is very important, is that the supply has shrunk. In each micro market, really, if you see, the supply is basically now coming from the 6 to 8 big organized players. And, those smaller developers who at one time used to have a large chunk of the market, at least in NCR for sure, are clearly no longer active. So really, there are a few suppliers who are becoming more sensible and more focused in their supply, and that is matched up with a boosting demand, which is possibly resulting in. So the situation is good, but it's possibly even better for the organized developers.
And Mr. Tyagi, is it at all leading to some price escalation? Because some of the channel checks do seem to indicate that at least in the Delhi NCR region, we have seen a price uptick.
No, absolutely. In fact, last couple of years, there has been price increases, and which really have been what the market has absorbed. So, in retrospect, what the market analysts tell us is that the reason Arbor, or not the reason, but one of the primary drivers for the Arbor sale was that while we thought we are outpricing the then market on that micro segment, possibly the market was expecting even a higher price, in that sense. So clearly there is a price positivity that is generally there. Of course, I think the players would have to be responsible in ensuring that they don't outprice themselves at any stage. But you are correct that at least for the credible developers, there is clearly a price positivity that is currently going on in at least the NCR market.
So let me put the maths here. Your net debt is lowest. Order outlook or the booking outlook is strong. Pricing uptick has started. So will it be a stretch if I say that DLF possibility could be a zero net debt company by end of FY24? Am I assuming it right?
Nikunj, we were at 57 crores net debt as of June 30th, and so we are almost, it doesn't take 9 months to get 57 down to zero, really. So hopefully we should be net debt zero far earlier than the end of fiscal. You are correct. So debt is no longer an issue, frankly, in that sense. If at all, we choose to sort of have some debt, it's predominantly to counteract the fact that a large part of our cash balances going forward will be trapped in the RERA escrows. So at times, you may still have some gross debt on the books, even though your net debt may continue to be zero or negative.
I'm saying it's a messaging, sir. Which is what I'm trying to bring out on the positive side, that for a company 10 years ago where there was debt challenge, yes, and you had to sell non-core assets to bring the debt down, both at an operating level and at a net level, you hopefully would be a zero net debt company in this financial year. What a turnaround it's been. I look at the positive side here.
No, absolutely. Thank you so much. It's been a long and a hard journey, as you know. You have been a keen observer of our company for a very long time, so you've seen these struggles. But yeah, hopefully, those days are possibly behind us now.
We understand that there is a lot of built-up capacity in SEZs, and there could be a change in terms of how those locked-up land constructed banks would be out in terms of the commercial market. If that has to happen, how will this change dynamics for the commercial sector and for DLF?
Okay, so great question, Nikunj. Really, if you see today, our total offices vacancy is about 9 or 10% of the total stock. But it's clearly higher in the SEZ space and lower in the non-SEZ space. All of us have been waiting keenly for the so-called DESH guidelines to be notified, which hopefully should permit the SEZ players to denotify their buildings partially and use them for normal commercial usages, and non-SEZ uses. Because as you know, the direct tax benefits of the SEZ spaces are gone now, so there is a lesser incentive for the new tenants to go into SEZs. So that's one thing which as you must have seen in the case of listed REITs also, that they are also possibly struggling with that. And I think we are all hopeful and optimistic that between the Ministry of Commerce and the Ministry of Finance, they should hopefully at some stage notify the guidelines for conversion of SEZ to non-SEZ spaces. And I think that should clearly free up and hopefully, put a greater driver to the locked up space in SEZs currently.
How much space does DLF have? And if the guidelines are to be implemented, let's say in FY24, what changes for DLF?
So clearly, I think the vacancy levels, which currently in the SEZ spaces are I think in the early to mid-teens. I think there's no reason why over a period of 1 year after the re-notification, they should not come back to the same 5-6% vacancy levels that exist for us in the non-SEZ spaces. So I think clearly there will be a significant vacancy absorption. The good news is that a large part of our older SEZs have a very high vacancy absorption, and this should still free up, I think, at least hopefully 1 million square feet plus of spaces which in our office portfolio.
Mr. Tyagi, now DLF is concentrated in and around NCR, but you're coming back to Bombay, you moved to Chennai, you just mentioned Goa. Why are you diversifying? And if you're diversifying this small, diversification, how much will that be in terms of an aggregate needle moving change for DLF? Is it worth it?
Okay. No, so good point. So just to clarify, on the commercial office business, we already have had a sizable presence in Chennai. In fact, in the next 2 or 3 years, we should be almost at almost a 15 million square feet installed capacity in Chennai of offices. We have a presence in Hyderabad for a very long time, which we are now building up further, because Hyderabad and Chennai are major office markets, and we've been there for the last, I think, 15 odd years now. On the residential piece, you are correct that maybe apart from Mumbai, which is a new entry, in both Goa, Chennai, and some other locations, we are not buying land. These were land parcels that we had acquired in the 2008 to 2010-11 time frame, those buoyant times. And frankly, while many of the land parcels in those geographies we had monetized as land parcels in the 2010s, now clearly, given the market tailwinds, we believe that the best method of using these land parcels is to actually build and develop these land parcels, which is the reason why at least we have 2 clear land parcels in Tamil Nadu. We have a wonderful land parcel in Goa, and I think we clearly believe that given the market situation today, maybe the best situation is for us to develop these as developed projects and then monetize them through that route versus trying to sell them as land, which we would have done 5 years back.
Couple of final questions. If one has to understand the way how the scenario is moving in the luxury real estate market, because that's where the exciting things are. If one looks at some of your marquee properties, the Camellias, I'm forgetting the names, but Camellia Aralias.
Magnolias, Crest, yeah.
Yes, you've not invited me, so I only know one name, sir. See. एक ही नाम पता है, वो भी cousin रहते हैं तो पता है, आपने तो invite ही नहीं करा. Next time I will remember it once I get an invitation from you. It is only Aisha, she prompted me, मैं नाम भी भूल गया था. इतनी मार्केट construction है, I forgot the names. That's the luxury market which has done very well. Across India, luxury is doing very well. What is your understanding of luxury market?
So clearly, I think 2 or 3 pieces. One is clearly that possibly the luxury segment customer has been less impacted by some of the macroeconomic challenges that the mid-income customer may have faced, including the hike in interest rates and EMIs and those sort of things. Clearly, the luxury segment owner has become possibly even more aspirational in terms of what they want from their product. And I mean, frankly, the entire acceleration in the pace of sale of Camellias, the resale pricing in products like Crest and Magnolias, I mean, those have been just sort of, started really accelerating. Our launch in Central Delhi, which is in the price points of about 20,000 to 23,000 rupees a square foot, is also doing extraordinarily well. So clearly, I think there's a positivity bias towards the luxury segment right now. Also, frankly, at least in NCR, unlike say Mumbai, there is not there's not a huge supply of the luxury segments here as well, in that sense. So frankly, there are customers who have the deep pockets to buy this stuff, and they don't have too many of competing products to buy from. So really, I mean, there's a push for Camellias, there's a push for resale market Crest, resale market Magnolias, and those sort of products. And we expect this to continue. In fact, one of our 2 launches this year, hopefully, should be in this luxury or super luxury space on the Golf Course Road.
All right. So looking forward to our invitation and coming to visit very soon. Thank you, Mr. Tyagi, for joining us on ET Now. All right. We'll take a very short break right